All righty, we're good to go. So thanks so much, Reed, and thank you for having me on your webinar today. It's actually a great 2-day event here where you can pick up a lot of information. You can put some of the puzzle to get some of the pieces of the puzzle together. So thank you so much, everyone. My name is Anka Metcalf, and today I will be talking to you about how you can generate an income day trading futures only 2 hours a day and actually trading the newer trading session. And this is something that I specialize in. I just want to add a little bit more on what Reed has mentioned about me. I have been a professional independent trader focused on equities and futures for the last 16 years. I actively day trade futures on a daily basis. I focus on the New York trading session mostly, and I swing trade equities, and I also swing trade futures. I have been in this industry for a very long time, over 25 years. Prior to becoming a professional independent trader, I've been in the investment banking, so in banking industry for over 10 years. I'm also the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. And we do offer comprehensive trading education for day trading futures, for swing trading futures, and also active investing in futures, and also swing trading and active investing in stocks. We also provide services. We have a live trading room that we run every day from 9 o'clock in the morning till 4 p.m. Eastern. We also have a program. It is called Managed Futures Program, where we trade your accounts. And besides that, I'm the designer of an institutional proprietary trading system that is based on price support resistance, specific trigger times, specific price zones, and chart synchronicity and divergency. I've also been featured in a lot of financial media outlets. All right, so if you guys want to get in touch with us, you can reach us on our website, find out more about Trade Out Loud and our products at TradeOutloud.com, or you could visit any of our social media outlets, and the handle is Trade Out Loud. If you also want to speak to me, this is my personal number. It's 561-865-6758, or you can reach us at info@tradeoutloud.com. So here's what I have in plan for today. We're going to be talking about how to find and execute high odds trades for maximum profits, why traders focus and should focus 100% on technical analysis, when, why, and how to trade futures, advantages and disadvantages of trading futures, because believe it or not, of course, there are more advantages to trading futures, but there are some disadvantages, especially at volatile times when futures trading is a little bit more riskier than you would trade the ETF. Best times to execute the trades in the New York trading session, and I think this is going to be the highlight for today's session. And size does matter when you're trading futures, and of course in determining realistic expectations, right? Because if you're trading a small account, then you should definitely have realistic expectation. You should not expect to a small account, meaning a $5,000 to $10,000 account. You should average out $250 a day easily on a $5,000 account, and as you grow your account, you can expect more, but have very realistic expectations, because there are there's a lot of information out there that you can listen. You can make, I don't know, $20,000 in 4 days or anything like that. Just please do your due diligence, or speak to someone that has been trading futures for a while, and they could really bring you up to speed on how this works. So how did I become an independent professional trader, and why did I become a professional independent trader? Well, first of all, I did come from financial industry, so I do know what trading in trading is about, and what trading entails. But the one reason why I gravitated more into providing a living through my own trading account is because I had more time off. And to me, this was number one. Obviously, if you work somewhere, if you just start working somewhere, you probably have a week or 2 weeks. If you're a contractor, then guess what? I have a lot of friends that are contractors. They don't have any vacation days. So they have to take time off on their own dime, which is not fun, right? So having more time to spend with your family, on your hobbies, or whatever you want to do, is actually number one. And this was number one for me. Second of all, this is not a job per se. It is a lifestyle. So you're going to live and breathe trading. And as a trader, don't think that my computers go off, anytime soon. No, I keep my computers all the time because I'm stocking for trading opportunities, whether for day trades or for swing trades, and especially for swing trades in the overnight trading session. And the beauty about futures trading is that it is a market that is open 24 hours a day. You could take advantage of the swings that are happening in the overnight trading session while you sleep. Third of all, I'm sorry, there's no commute. When I was working in the financial industry, I had about an hour and a half commute from my home to the workplace, and that was really tough on me because I would spend about 3 hours in traffic. Now in the morning, I trade less than 3 hours, and I pretty much bank my profits, or if there should be profits within that day, obviously, because not all days are winning days, but mostly I'm making my living just trading focusing on these 3 hours. And then in the afternoon trading session, because we do trade in the afternoon trading session, I personally do, I like to focus more on swing trading and trailing and trying to find new trading opportunities. So more than rather a scanning, laid back kind of style. Also, working from home or anywhere with an internet connection. Like I said before, this is a lifestyle. You literally don't need a vacation from. It is a lifestyle. You watch the charts on the go. You're at the beach. You could pull up your phone and see where the indices are, see where your stocks are. You could take decisions now. It's not like 25 years ago where you would have to call your broker. No, you have everything in the comfort of your iPhone or of your phone or smartphone or iPad, etc. The best thing about all, you don't have a boss, so you don't have to worry, about anything. You are your own boss. And what I like to say is that my charts and my symbols, my ticker symbols and my indices, my futures are my employees. They do all the heavy lifting. I just identify and just put the orders in, and they do all the work for me. So you're your own boss. And no matter how the economy is, here's the beauty about it. No matter how the economy is, you make your own money. Okay, the stock market is never going to go bankrupt. You make money as the market is going up. You make money as the market is going down. And obviously, if it was going down on panic, you actually get to make money even faster. One of the reasons why I loved to, why I took the decision to become a day trader is, first of all, and a trader in general, is first of all to escape the Detroit, Michigan winters. This is where I spend a lot of time in Detroit, Michigan, and now every time, this is where I am right now. I just came back here a few days ago. I had to do some business in Detroit, and I was stuck there for about 2 months in this weather, not kidding you, and now I'm here. So when I go outside the terrace, this is actually my view right now. Also, results. Let's talk about results. So how did I get here? Well, first of all, these are the results. This is the year-to-date contract per contract. Once again, these are the 2018 results. Obviously, last year we had a really great first, second, and third quarter of the year. The last quarter of the year was a little bit squeaky. As you know, we had the volatility, and we had a really volatile year. 337 hedge funds have closed their doors. We're talking about professional independent traders on Wall Street have closed their doors because they lost a lot of money. And we thrived. We had a fantastic 2018, and we're into a really great start for 2019. February results are not there yet because we're still in some trades. We're in natural gas. Oh my, and as I'm looking right now on the charts, natural gas is just popping. So we're in natural gas. We just got out of gold, by the way, and where we ranked 24 points, and we're looking for a secondary entry opportunity in gold as well for another swing. So again, but how do you achieve these results? Well, first of all, you have to learn the strategy. You have to be extremely confident in your decisions, and you have to know that what you see on the charts is exactly what other traders are seeing on the chart, the possibility of institutional money, because we follow, and I follow the institutional money flow. I don't get in for really small moves. I try to get in on the larger moves. I like to get in with confirmation. Sometimes I'm not that kind of trader that buys at the bottom of the range and sells at the top of the range. No, that's not for me. I like to see the confirmation over the range because I want to see the price prove to me that it is ready to continue higher. This way I have less stop outs. So you got to learn the strategy. And it's not a sophisticated strategy. We basically buy or short in ongoing trends on pullbacks or breakouts with momentum confirmation. This is very important, the momentum confirmation. We are patient to wait for the setups. If you're into our trading room, you could see that we take from 1 to 3 trades a day. Obviously, if we have a big winning trade, we have to adapt for our second trade and third trade, because it's not only psychology, but you don't want to give back all the profits. Or if you incur losses within that day, you have to readjust your trading strategy for the rest of the day. So it's not a carbon copy of every single day. Every day is different, and that's why I love trading, because trading is never boring. So focus on the first 2 hours in the New York trading session. This is my 100% focus. Now, let me tell you a little secret. If you focus on 2 hours, your brain is going to be extremely focused on that specific time frame. Every 2 hours, our brain goes on a commercial break. What that means is that you're losing focus. And you need a break. So you cannot go on and on and on, be very focused on day trading from 9 o'clock till 4 o'clock. You have to be focused on a specific time of the day. If you want to start later and if you want to trade the PM session, that's fine. We're going to talk about better trading hours when you're trading futures, especially when you're focusing on future indices like I am. So I have specific times throughout the day that, and I have specific trigger times, which are proprietary to our system. And we focus our strategy around those time frames. First of all, why the first 2 hours of the day? Because that's when you get the best momentum. And we're going to get back to these first 2 hours. And I'm going to explain in detail what happens within these first 2 hours. You get that institutional participation and more. Most of our traders are done by 11:30. We have a lot of traders in the trading room that actually trade from the west, that are actually West Coast traders, and they start earlier and they're done at 11:30. They're out the door. They continue with their day, or they go to work. I have a lot of traders that have done a lot of education with us, and right now they're just trading their accounts, and this is their full-time job. So they are not, employed anywhere else. They're making their own living and they're living successfully. Okay, so the next thing is like, why should you be focused on futures and not stocks or anything? And trust me, this coming from me is really hard because I'm a stock addict. I love trading stocks, but now I gravitated more into swing trading stocks, and I only day trade futures, obviously swing trade futures as well. Why? Because these are two different styles, day trading and swing trading, right? You day trade for income and you swing trade for what? For wealth accumulation. Whether you want to build a retirement account or whether you have long-term goals, this is your long-term money that you're looking for, that you're looking to grow in a swing trade. And I highly advise that if you want to day trade and swing trade, do it in separate accounts, because if you're swing trading and if you're looking at that every little single tick in the market, that is going to influence your swing trading decision. So keep things very, very separate. And so why trading futures? First of all, if you want to day trade stocks, you have to have at least $25,000 to open a trading account. And guess what? You have to have way more than that, at least $5,000 more, because if you lose 1 cent below $25,000, you're not going to be able to day trade anymore within that account. Your day trading option is out the door. So you're back into swing trading. So with futures trading, you can open an account with as little as $5,000 and start trading, and you could actually go below the $5,000 because you have to look at the margin requirements for your trades. And of course, there's a lot of homework that you have to do here. There are, for instance, the broker that I use, it has a minimum requirement of $5,000, but there are brokers out there that you can open an account with $3,000 or even less if you're trading overseas. Plus, there are a lot of prop trading firms out there. We actually work with a really good prop trading firm that you could actually, if you prove that you can trade, and I have a lot of traders into my program that took my education, and I highly recommend that they start with a prop account, and they're doing fantastic. They're just blasting. I have a few examples here, real examples for you to show. Well, first of all, the advantage of the buying power is phenomenal of stocks versus futures. First of all, if a trader wants to, let's say, trade the Qs, the ETF, which are priced at 151, let's say hypothetically, and the trader needs about $8,100 to buy 100 shares. So $8,100 to buy 100 shares. And if the price goes up 50 cents, you make about 50 bucks, and 50 cents is quite an impressive move when you're talking about stocks. So each cent is basically $1. If the trader wants to day trade, let's say the mini NASDAQ, which is priced, let's say hypothetically at 61.20, the trader needs about $6,300 in his account to purchase one contract, and that's the buying power. One other thing that I wanted to mention, I don't like to trade on margin. Okay, so if and I'm not using any leverage, if the price goes up 50 points, which by the way, NASDAQ is up 50 points right now. We have YM that is up over 150 points. S&P is up 14 points. So with this market volatility, you can see oscillations of 50 points in NASDAQ on any given day. Each point in NASDAQ is $20. And if the price goes up, let's say in NASDAQ 50 points, which it did today, you're going to profit $1,000. So you don't necessarily have to make it in one push. By the way, commissions are super low. You could get in and out every time. Now, we did a study and we wanted to show our traders the advantage, the true advantage. This is a chart of the Qs, and you could see here that at the time of this example, we did this example at the end of 2017, we bought 100 shares of the Qs right here at 151.47. You could see that the price went up 1 cent, we were up $1 in the account, and the buying power was $7,500. On the same proprietary trading strategy, which we will talk about in a little while, it is within a buy into the support zone. So it's a classical buy into support zone, but this was the buying power effect. Now, side by side, we have NASDAQ with the same strategy, buy into the support zone. You can see the entry price is 62.21 at this point, 0.75. You can see the entry price right here highlighted with yellow, and you can see it right here just pop one tick above. And you can see the buying power, it was less than $5,000 when we did the example. And you can see very well that tick is $5 right here. Now, let's take a look at the outcome. Remember, we had the rotation of the support level back here. Our entry price, this is our entry price, the 151.47. The price currently trading 32 cents up, right? Because each cent is 32, each cent is $1. $32 up on this move on a buying power effect of almost $8,000. Trade duration, by the way, 20 minutes, right? Because we're talking about day trading. Side by side NASDAQ, you could look at NASDAQ, same proprietary trading strategy, rotation off of the support level, punch through resistance, continuation higher. You could see right now 250 bucks right here, right? So we're moving higher. Look at the buying power, same trade duration, same kind of move. All right, let's take a look at this example right here. This is from today. Right shortly before I entered into this conference room. So this is the entry right here. This is the entry right here as part of a rotation off of the support level with the breakout zone into the 172.40. The stop below the support zone right here into the 173. These are the Qs. Profit into the target level is into the 173. Profit target here is into this 173, and the profit is 60 cents. So that means that it's $60 for 100 shares. And again, buying power is over $8,000. Now let's take a look at NASDAQ, right? Way less buying power, right? Same rotation that happened, but look at the power of acceleration in NASDAQ, and look at the advantage of the buying power and the push to the upside. 27 point profit into the target level, into the 7,100. That's 27. That's $540 per contract compared to $60 per 100 shares. I think that's a great difference, right? So I think that this is a great image of, let's say if I would cover the prices right here to the left-hand side, you could actually see they're actually like carbon copied, right? Carbon copied. Look at the moving averages. The 20 SMAs was blue, 20 SMAs here, 10 EMA. These are the moving averages that I'm using. The 10 EMA is here. Look at the 10 EMA in pink is here. Flat 200 SMA, they look the same. So my question to you is, if you're still a stock trader, why not take a second look at futures trading? One of the reasons why I like to day trade futures is that I have a minimal watch list. When you're day trading stocks, because I have day traded stocks for as long as I can remember. So if you're day trading stocks, you have to have a trading universe. Or you have to use a scanner, you have to pay attention to gaps. So there are a lot of things that come into play when you're trading stocks. So there's a lot of homework that goes into trading at the open in the first 2 hours into the trading session. The beauty about trading futures is that you can actually take trades before the market even opens if they're setting up, if there are no pending economic releases that are coming out, because that's a very important factor. A lot of futures traders think, oh, this is a 24-hour market. I can get in if I see a setup at 8:15. I can get in, but again, at 8:30, there's a big chunk of news that is coming out, right? And if you're used to trading stocks at the open, you may ignore those economic events, and that's a big no-no, because what happens is you can have the right setup. You can get in on that beautiful setup, let's say, that you see onto, let's say, a 5-minute chart or a 2-minute chart, and then in 15 minutes later, bam, you have economic releases that basically can work for you. But most of the time, trust me, when you're in a trade, most of the time everything goes against you. You know how trading works. So minimum watch list, this is everything that I'm watching on a day-to-day basis for day trading purposes. I'm watching the Dow, S&P, NASDAQ, and Russell. I'm watching oil and gold mostly for swing trades, but today we did have a trade in gold as well. I'm going to talk about that later. So why day trade futures? Well, because not only you could day trade it, you could day trade on your own time. For instance, there are better times throughout the day. I like to focus on the New York trading session, but I have a lot of traders that like to trade the overnight session. For instance, from 9 o'clock to 10 o'clock p.m. Eastern, futures indices have really nice move development. So you could actually take advantage of some moves. Last night you had a really nice breakout in the Dow over 25,860, and that happened very close to midnight. So if you're a West Coast trader, you could definitely take advantages of these powerful moves. If you're a swing trader, if you want to hold positions for a longer period of time, let's say from 2 days to about 2 weeks, you could trade energies. RBOB, which has had an amazing move to the upside within the last few weeks. Same with heating oil. Natural gas is something that you trade at extremes, so you have to. It's just like the VIX. You could also trade the bonds. I have traders in my trading room that love to trade the bonds. I have traders that took the class just to trade bonds, and they're only trading between 8 o'clock and 9:30, and then they're done. You could trade the 30-year, the 10-year. You could trade the 5-year note, the 2-year note, etc. Or you could trade metals. You could trade gold, silver. I mean, you could trade anything. Copper. Copper has had an amazing move. And by the way, it just made a new high just about 10 minutes ago. And copper is on a run right now. Very, very hot commodity. You could also trade soybeans, corn, etc., wheat. But be very careful when you're trading these, because they have been pretty sideways right now and pretty choppy. Currencies, if you're a forex lover, you can actually dive into futures. You can trade the dollar, you could trade the euro, or you could even trade currency pairs. So there are a lot of opportunities out there. If you're an indice lover or a stock lover, you could definitely focus on the indices. If you are a currency lover, you could focus on the currency pairs, or you can focus on individual currencies. So there's a little bit for everyone out there. The other thing about time flexibility is that I like to focus on the newer trading session for one reason alone. You have a lot of institutional participation, and especially in earnings season where you have the power of earnings. We're kind of like into the Latin phase of earnings season, and less companies are reporting. But whenever you have the beginning of earnings season, like come April, we're going to have another dynamic session. It influences the indices. If you're having, let's say, and did you know, by the way, that you could trade Apple, you could trade Google via NASDAQ, you could trade Caterpillar via YM, you could trade financials via S&P 500. So you have a lot of opportunities through futures trading. The one reason why I love trading the newer trading session is because we have a lot of momentum that is generated from the overlap of the London session. And we have two powerful sessions as one. London session closes at 11:30 every single day. That's when the volume subsides. And that's also coinciding with the lunchtime doldrums, and setups don't tend to work so well within that time frame all the way into the 2 o'clock. There, things may be shaky. So you got to know what to do and what strategies to apply, and we teach you what strategies you need to apply, what time frames you need to watch, because believe it or not, even if you're day trading, you're not going to be glued to one specific time frame. You're going to gravitate through time frames, and we teach you how to do that, because in the morning you need to focus on specific time frames at the open, and as you move along through the lunchtime doldrums, you need to specifically look at totally different time frames for your trades to work. And going back from 2 o'clock, you have to look at different time frames again. So we teach you everything, because one of the reasons a lot of traders fail is because they have the tunnel vision. They either focus on the tick chart or the 2-minute chart or the 5-minute chart, and they focus on that time frame alone. And today we're going to be discussing multi-time frame analysis, and also on which time frame should you focus on to take good trades. Now, the other timing if let's say you have a full-time job, you want to transition easily, and you want to learn how to trade futures, and you want to make that smooth transition, there's also a sweet spot that is between 9 o'clock and 10:30 or 11 o'clock at night. I always look at that sweet spot. That's why I'm telling you guys that I always have my computers on, because it's a lifestyle, right? I place tons of alerts so I don't miss a beat, right? Because you have to have a little bit of independence from the screen. But when you're having these sweet spots, you got to make sure that you're in front of the computer and assess your key zones and key locations. Again, the futures market, like I said, it's a 24-hour market. This market never sleeps. It's open 6 days a week. It opens Sunday at 6 p.m. Eastern, and it closes. I'm typically out of the market, and I'm not looking at anything else from 4 p.m. on Friday. And I also trade futures. Futures is still open till 4:15, but I never put trades into 4 o'clock and into 4:15. So I wrap everything up when the stock market closes. I wrap everything up in this in my swing trades as well. One of the reasons why I love futures trading, and you can see the multiple advantages already here, not only that it's a 24-hour market, but the stock market is only open from 9:30 to 4 p.m. Eastern, while the futures market is open 24 hours, 6 days a week. Guess what? Political events do not wait for the market to open. Events just happen. So if you want to take advantage of the opportunity that the market offers you, you have to make sure that you're in the market, okay? And if you have the market that is closed, guess what's going to happen? Guess what's going to happen when the market opens? You're either going to see a gap up or a gap down, and probably the move was already calculated in, and from the open you need a digestion zone before you leg in long or short. So moves happen, and typically large moves happen in the overnight trading session as well. Many markets that affect the US market trade outside of the US market hours, and they influence the US market hours, and that's why you're getting the price fluctuation. I mean, in the overnight trading session, we had the E-mini Dow move from 25,800 all the way into the 25,970. I mean, that's an impressive move, right? That over 100 points, right? 170 points. Okay, so you don't want to be the trader that waits for the market to open to place a trade. You want to be trading in the moment. Other reasons why I am so focused on futures trading, and I have been for the last 6-7 years, because like I said, I'm coming from, I came from stock trading. I was a very active day trader, stock day trader, and very active swing trader. I still kept the swing trading for stocks, but I wanted to simplify my life. I didn't want to go through scanning. I didn't want to do this. I didn't want to do that. Well, where in the futures market, you keep a tab on everything, because you wake me up at 2 o'clock in the morning, I know where the Dow was trading. I know where the S&P was trading. Okay, the one thing that I love about futures trading is that you can take on a short position with ease. You don't have the uptick rule. For those of you that are stock traders, you know what I mean. You got a reliable volume, very reliable volume, and even in the overnight, even in the Asian session, you get way better commissions. The commissions are more than less than half of what you pay for stocks. You do not require a scanner. I can tell you, there are so many costs involved when you're trading stocks. I use a scanner. For me, it's about $250 a month to use the scanner. I've been using it for, I don't know, 17 years now. But you have to have a scanner. You have to know the pulse of the market, right? So not unless you have 24 monitors where you can have like 6,000 stocks, okay, you need to have someone, an assistant, to help you. Or if you don't have the assistant, you use a scanner. You don't need any special indicators in order to trade futures. I do not. Price action is king. Guys, don't focus on indicators, sophisticated indicators. Moving averages are more than enough, because you want to keep a tab what other traders are doing. Remember that there are a lot of algorithms that are based on these moving averages, and a lot of moving averages on different time frames, and those are the key points and the key zones right here. Other than that, you have to keep a tab on what? On volume, and see what the market participation, what the interest is, and that's pretty much it. Don't rely on a don't rely on an indicator that is going to tell you, oh, it's time to buy or it's time to sell. You're never going to learn to trade. You need to learn patterns, pattern formations, key zones, support resistance. And by the way, there are 7 layers of price support resistance that you need to know before taking a trade. So believe me, the only people that are making money off indicators are basically the people that are selling them. I see no reason why. You have to be able to know how to trade on your own. Otherwise, you're never going to grow. You're never going to progress. And what happens if that indicator gets discontinued? I mean, you're in the air, right? So tax advantages, there's a 60/40 rule, and simplified reporting. At the end of the year, you get a 1099-B form, and that's it. You get lower income tax rates depending on whether you're doing this professionally, etc. Okay, you can hedge. You could do a lot of things with futures. So how to generate an income trading futures? Well, first of all, you got to learn a system, or you have to have a system. Whether you're getting your feet wet right now in futures trading, see how they're trading, okay? Evaluate. Think about if this is something that you want to do. You have a lower, let's say you have a smaller account. Maybe this is something that you want to gravitate to. But remember, do not trade real money unless you really know what's happening in the futures market and really know how the futures market works. I always advise my traders, even after taking my class, which is a hyper comprehensive class, to trade in a simulated account or to trade in a prop account to prove that you can make money for at least 90 days before going live. And it's not like you're going to incur losses within 90 days and then you're ready to go live. No, you have to prove that you can make money. And that's why we've partnered with a proprietary trading firm that we can provide you the proof that you can trade. All right, so first of all, you need to learn the system. You need to implement and respect your system. Whether you decide trading hours, your game plan, your trading plan, it is imperative that you have a trading plan. It's not going to be a sophisticated ebook or a book. No, your trading plan needs to be very simple. At what time of the day are you going to trade? What setup you're going to trade, and what are the parameters that you're going to look for in the trade? And then all you have to do is sit back and wait for, let's say, for the mini S&P to pull back into that specific zone. And in the meantime, what do? Absolutely nothing. You just watch price. Don't feel the impulse to just push the buttons, okay? Don't do that, because you don't want to be the liquidity provider, right? You want to transform your personal computer into your personal ATM machine. And the third thing that you need to do is repeat the system. It's repetition, right? You are waiting for the pullback, you're waiting for that rotation, you get in, you exit at your target zone, or you trail into your target zone. And what do you need to do at the top? You wait. You don't short that. I don't like shorting into highs, because within really strong trends, and by the way, the futures indices and the indices in general are into their 9th week. I know there are a lot of traders that are thinking, oh, this is a short, this is a short. Are you kidding me? No, until the market proves that it is getting ready to short, until the market demonstrates that it has a pattern conducive of shorting, I'm not shorting this market. I'm not even looking for a 5-point scalp short in this market. I'm always looking for pullbacks, and shorting not an option. Okay, shorting not an option, at least not now. A lot of you are going to ask, is it easy to learn? Is it easy to learn how to trade? Listen, it's not hard. It's not rocket science. The one thing that traders that the traders don't understand is that they try to overcomplicate it. I have a lot of examples. We could talk after the session. You could give me a call. I had a lot of traders that took the class and then started to make a lot of money, and they got lazy, and then they ran into the next webinar, into the next indicator. They bought it. They spent 5 to 6 months there learning how to use the indicator to do what? Only to fail, because they thought there's a holy grail out there that they can get. The only holy grail, guys, it's in your head with your knowledge. This is a skill that you learn, and it will last you forever, okay? That's the only holy grail, the things that you learn: price action, how it moves, where you can expect for the price to react, how to calculate targets, how to calculate entries. Everything is a math. Everything is math. So how long does it take to learn? Well, we offer a class, and basically you're gonna learn everything in about a week. But that does not necessarily mean that you're gonna be a genius after day 6. No, you need time to implement all the strategies, because believe it or not, you have all the information on the manual. We have technical analysis chapter like nobody has. We have the ultimate technical analysis chapter in our manual. It teaches you everything, absolutely everything you need to know about technical analysis. 7 layers of support resistance, and how to buy, sell, determine targets, etc. only in that chapter alone. So does it take time to learn? Listen, when I first started trading, my mentor taught me, you're going to be a complete trader in about 3 years. And I go, nah, are you kidding me? I'm 6 months into the process. I'm already delivering. I'm already making money. Are you kidding me? No, it takes time. You need time, because you get to go through different market cycles. What happens if you learn how to trade last year in the last quarter? You got wiped out. Right? Trading was so hard in the last quarter. A lot of traders gave up. A lot of traders that started trading in 2017 and the third quarter in 2018, already gave up trading. Why? Because they thought that they cannot make it, where it was not that. Shocker. No, it was the market. It was the very whippy market. So you have to go through these market environments to learn the complete cycle, the complete process. You're going to go through election years. You're going to go through non-election years. You're going to go through FOMC meetings. So you need to have a complete cycle. Is it worth the sacrifice? Well, yeah, I would say yes, it is worth the sacrifice, knowing that I can start studying now, and even if I start making money a year from now or 2 years from now, that can offer you peace of mind. Think about it now. If you're in your 30s or in your 40s, or even if you're in your 50s, guess what? It takes you 1 year. It takes you 2 years. Obviously, my traders make it way more faster than that. Within 3 months to 6 months, they start making a lot of money, and literally a lot of money. And best of all, guys, you can talk. So we're not offering any written testimonials or any verbal testimonials or whatever recordings. No, what we do is we offer you the chance to speak live to our students, right? Because guess what? You're going to be talking with them about losses, about wins, about this, about that. So they're going to be able to provide you with all the information. So is it worth the sacrifice? Yes, it is, because you're going to learn a skill that is going to last you a lifetime. Why is it that 85% of the traders fail? Lack of dedication, lack of discipline, lack of education. They don't have a system. They run out of funds and no mentor. That's it. Not all the people that take the classes and that are willing to learn how to trade are going to make it, because they are going to lack one of these elements, either the dedication or the discipline. A lot of traders don't have discipline, and that is what kills them. So to become a successful trader, you need to take the time and the effort. So let's go back to, when is the best time to day trade? Well, first of all, my favorite time to day trade is from 9:30 to 11:30. I put here at 9 o'clock because there's a very important piece of information that you need to have that you need to apply from 9 o'clock to 9:30. That's your pre-market game plan. That's it. This is the time within this 30 minutes, you have to evaluate everything. What are the incoming news? If there are any, you have to determine a game plan for all your indices, because hey, here's the thing. Today we decided to trade the E-mini Dow. Why did we decide to trade the E-mini Dow? Because it had relative strength and it had a better chart structure at the open. We had the option to trade the Russell, we had the option to trade the S&P, we had the option to trade NASDAQ. Not all indices are moving the same, and especially in earnings season. If you're having stocks within a certain sector that are performing, you're going to see that specific futures index just propel higher or lower depending on what the sector is doing. So when you're trading futures indices, there are a lot of things that you need to take into consideration. Don't think that if you're just starting trading futures, oh, I'm just going to focus on YM. It's fine if you want to focus on something from the beginning, but remember that when you become a professional trader, you have to look at all the indices and take the diligent decision which one to trade that day, which one is going to be in play that day. And we had price velocity right from the beginning, where we had price velocity in the mini Dow this morning, where the rest of the indices had a lot of issues. So I focused in the New York trading session from 9:30 to 11:30, and then at 11:30 I start to wind down. I'm getting ready for my lunch break, and then I want to come back into the market around 2 o'clock. I'm back here earlier. I only take an hour break. I'm back into 1 o'clock because I want to see the market structure, or what happened, if there are any news, any rumors, et cetera, et cetera. So why do I focus on this time? First of all, you get the volatility. Why? At 9:30 when the market opens, that's when the New York trading session kicks in. That's where the balancing, all the orders are going to come in. That's also considered the first 5 minutes of fleecing time. So be very careful. Don't place your orders just necessarily in the first minute or that 9:30, bam, I'm getting in. So remember, that's the fleecing time, or if you do, make sure that you have a little bit wider stop. So I like the volatility. I embrace volatility. There's good volatility and bad volatility. The bad volatility was last year. And in fact, for options traders, maybe it's fine because you get the dynamic moves on one side or the other side, but it could be a double-edged sword. I typically disliked the 2019 volatility for indices. Why I dislike the volatility in indices, especially in the latter half of 2018, is because the stops were incredibly wide. If you're a day trader, if you wanted to trade the 1 minute chart, you would have a setup that would have 150 to 170 point stop. You would have a 1 minute bar that was about 100 points. That's what volatility does, and that's where a lot of traders have lost their shirts, their trading accounts. They're not around anymore, okay? And that's what happened. Okay, here's what we did today, and this is a trade from today. So I always like to bring examples from the current day where we have a presentation. So We took, this is the original call from my trading room. You can see it right here. We had it long, we had YM long at 945. The stop was 25,900 and it propelled higher. This is where we got in at 945, bam. And it went higher. And this was the first portion of the trade for 35 points. What does 35 points mean in the Dow? 1 point of Dow is $5. If you're trading with a very small account, let's say with $5,000 account, you would have made $175 with one contract. I mean, the return on a $5,000 account, $175 a day, are you kidding me? Where your commissions are about $5. So you literally cleared 170 bucks. That's phenomenal. Compute that every day. So if you make $170 times 20, right? Trading days within a month, that's $3,400 average, okay? If you have a larger account, definitely $1,700. I trade a larger account size and I have a different management strategy that I share. So in my trading room, I suggest for traders, if they have small accounts, what to do and where they need to lock in. And if they have a larger account where they get in with more size to ease out as the trade is progressing higher. So this was one trade. The second trade that I called today, and it was very frustrating. It was very frustrating, okay? You can see the call right here, 1332. The stop was under 1330. It was a range. You can see the range right here, okay? It was a breakout range. And at the price, and we were at the same time in the E-mini Dow, and we were making money in the E-mini Dow, and I'm like, I don't want GC to turn against me in this specific trade. So I let it go up. It went to like 33. I mentioned in the room, guys, we need to see a 33.3 1333.3 print and before I lift my stop to break even. And at the same time, there was something on CNBC. They just started to discuss about gold, how they wanted to short gold. So this is not a long for gold right here. And I'm like, man, I hate this because they are literally just trying to push and they're trying to pull the price. They're manipulating the market. They're manipulating the price, especially for day traders. And this jump around, this is what happened right here. So we placed the stop immediately as CNBC started to talk. We placed the stop at break even because we didn't want to lose. You know how they can influence through social media the price, and I hate that. But anyways, we locked in break even. We didn't have a loss. But our target was 1335 and went exactly to our target. In fact, it made a high into 35.6. We would have locked in 1335, and that's a good 300 bucks. Okay, well, it is what it is. Yesterday, I took it to social media. I had a lot of requests. I'm getting so many private messages on social media. It's like, give us a trade idea. Traders that want to, let's say, find out more about our method. What do you think about NASDAQ here? What do you think about this here? So I just post things and with elements of technical analysis associated with my bias. So here I was waiting for a 5-minute pullback to the 25-30 zone to hold and reverse from that area and to go where? Into the 70-60. And this is what I was watching. I was watching for a trade over 70-50. And the stop right here into the 40s, and I was waiting for a continuation to where into the 60 and 70. So for 20 points. So the risk was 10 points to make 20 points. 20 points, as you know, 20 points is $400 per contract profit. Again, this is for a small account. So remember today, if you knew our method, if you knew how to trade with our method and you were in our trading room, you could have made that kind of money. So $400 on a $5,000 account, that's pretty good, okay? The other thing is that you don't need a lot of money to start making a living and to start making an income in trading futures. And of course, depending on your account, you can make more. So $400 with one contract yesterday, right? But you could, if you traded with 4 contracts, with 10 contracts, you could make way more money. But again, keep your expectations realistic and don't overbuy and don't go over your trading limits. Do you need a huge account? No, you don't need a huge account. This is our natural gas trade right here. You could see it. This is my entry, 2.57. Right now it is trading at 2.712. Okay, this is a swing trade. These are the types of trades that we call in the trading room. These are the types of strategies that we teach you where to take the trades. We took the trades 2.5. A lot of traders were asking me, it's like, wow, it looks like a falling knife. Like I wouldn't get in, I wouldn't do this, I wouldn't do that. Oh, okay, don't do it. I'm doing it. Okay, I'm doing it. It's my account. Why? Because I know the technical level. I know I have been trading this long enough to know what happens. This is another trade in copper. You can see it right here. Again, this is with one contract. You don't need a large account size in order to make a lot of money. Think about it. This is all, look at the date right here, February 21st. You don't need a very large account size to make this kind of money. The other thing is, okay, 5-minute charts. This is the day trade. We teach you how to take advantage of these rotations at specific time frames. Remember, 10 o'clock is one of the most powerful reversal times that we have in the market, and this is when this trade occurred. You can see it right here with 2 contracts, $860. Okay, another trade in gold. This is another example right here with the outcome. Again, look at the position. Only 1 contract. Look at the outcome. Okay, this is the futures market. Look at copper. This is another example right here. Again, with 1 contract. All right, this is another example in copper, again with 1 contract. Take a look at the size. 1 contract. You don't have to put on a lot of size to sweat your position on to make money in the futures market. Just trade 1 contract, but position size. Okay, because it all depends on your risk. Now, this is a chart courtesy of one of our students, Jonathan. He took the class. He's in our trading room. He trades with us every day. He did not open his a brokerage account. He went the proprietary way, and he's trading his account using the Trade Out Loud methodology. He's trading live. He's averaging $500 a day. He's trading with 2 to 4 contracts every single day when he's day trading. He's only day trading. He's not swing trading. You can see right here about $640 on this specific day in oil, and this is the trade. So our students are sending us, they're so happy, they're sending us their feedbacks. Here's another example of our student. He's sometimes he logs into the trading room, sometimes he doesn't. He's actually a mentorship student, so he took the class, but I'm private on one-on-one with me. He has a full-time job. He owns a practice. He's a chiropractor in Knoxville, Tennessee, and he's a swing trader. This is what he does. By the way, he's still into YM long, 3 contracts. Take a look at this. You should hear his testimony. He's not even sending me testimonials. He's sending me emails. You should see, and sometimes I share because every week we touch base, and he sends me an email with the update. Look at his outcome. 3 contracts, guys. 3 contracts. He's up only over $30,000. Over $30,000. Okay. If you're not convinced about trading futures yet, definitely I want to know why. So write me an email. Here's more charts. You can see the trend going higher, and then very important for stocks as for futures, never fight the trend. If the trend is showing you higher, why should you be shorting? Okay. Again, these are some examples right here of 1 contract. Again, you can see the 1 contract here. These were increments of 3 contracts at a time. Again, this is another copper trade. So again, think about this. Am I willing to start learning a system? Do I want to learn a system that is going to provide me the liberty to do whatever you want? Maybe not in 6 months, maybe, because trading is hard work. And I know that everybody that hears, oh, trading is hard work, I want the easy way around. Oh, just give me an indicator and just give me a trade and just do this or do that. I actually provide you with a trading education, and not only that, but I take the trades with you every single day in the trading room. Or if you don't have the time to trade, based on all the trades. We can take all the trades for you, all the trades that are posted into the trading room and that I comment on. They are definitely taken into your managed account futures program if you wish to do so. Okay, these are more examples right here. This is trend trading. This is exactly scalping. You can see the size right here going in, out, in, out, in, out, okay? And you could rack up profits very quickly scalping. So we teach you how to take advantage of power trends, because remember, today was a perfect example of power trends. When does the power trend end? When is the best time to get into a power trend? Is it a good time to get in a power trend? How do I trade a power trend? Because power trends are very difficult, especially for the day trader. If you're a swing trader and if guess what, you don't have an entry, but as a day trader, you could still leg in. How about counter trends? How about if you want to short the high, or if you want to buy at the low? For instance, the buy that was ideal when it was in December. Do you think that if you look through our portfolio, and by the way, we have a transparent portfolios on our website, you can log in, you can see all the trades with the entries, the stops, the targets, etc. Do you think that if you look at our performance in 2018, you can count the days that we were short in? We were long most of the time. Why? Because the trend is higher. The institutional money is higher. They're all looking to leg in higher. We teach you how to do momentums, how to scalp. We teach you how to do swing trading. We teach you how to trail. What happens if you make money in a trade? Now what? Where do you raise your stop? How do you trail that trade? We teach you how to identify entries, how to determine risk, that very important, how to position size, and strategies, what to do and how to trade if you have 1 or 3 losses within a day, and how to trade if you have, let's say, 1 win or a few wins. Call it a day, continue, etc. So you need to have a game plan, because every day is different. Look at this beautiful breakdown here. We teach you how to act on patterns like this, whether you're going to short the highs or short the lows. This is something that we teach you. So we teach you an institutional grade trading system. It is designed for the retail trader. I designed it for myself. We teach you how to map out the key price zones for the trading session, specific trigger times for the morning and afternoon. We teach you specific price locations, where to buy and where to sell. We teach you chart synchronicity and divergency, meaning what to trade within that specific day. We teach you the strict trading rules and a scoring system that enables you to identify trades with ease. All right, so it's all about technical analysis. And why? Well, because this is what works. Knowing how to read the charts and how to put the pieces together. Because here's the thing, you're offered a lot of material. You could actually get all the material almost for free, on some of the material also for free on the internet. But guess what? Do you think what the hardest piece is? Putting the pieces together. Because very few traders know how to determine the entries, the stops, the target, the risk, position sizing, and trailing. Not everything is about only the entry or the stop or etc. You need to know the rest. You need to know how to use multi-time frame analysis, because there's some charts that are pointing lower, some charts that are pointing higher, and you need to know how to put the pieces together. So if you have the desire to make trading work for you, and if you want to change the pattern you're in now, you could actually work with us. We can teach you how to do all this. So you can learn the system, you can develop the skills by following our trades every day with the market analysis. You can develop healthy trading habits, and we mentor you along the journey. If you take our class, we provide you unlimited support. You have unlimited access to me. You can call me, text me, email me. I mean, where else can you do that with a trader? You typically go to Amazon and you buy a book or a DVD, and that's it. We offer a 5-day class. The class starts March 25. If you want to start right away, you could do it now. We provide you with a manual. We provide you with the prior class recordings, and then you can jump in and trade with us live on and start learning with us on March 25th to 29th. The class tuition is $49.95. You could actually call us now, and we're more than happy to talk to you about our classes and anything else related to trading.